All right, now we're going to dive into the technical analysis. This is where the real chart work begins and the first real step in actually beginning your technical analysis journey and learning to master chart work. So, market structure. Market structure refers to the highs and lows of the market and how they react to one another. Now, as mentioned in the previous video, my approach to technical analysis focuses very heavily on price. And I don't actually stray away from price too much to use indicators or anything like that. I just like to focus on both the overall picture, the overall flow of the market, and also each individual candlestick. And this is how I do my analysis, and this is how I do my trading. So the basis of all of that price action trading, of all of that market flow trading, is the market structure. And what this refers to is how each high and low of the market is reacting to another. So we're going to talk about market structure in this video. I'm going to explain what it is and why it's so important. So market structure really refers to trends. The market moves in three different trends. We have a downtrend, we have an uptrend, and we have a sideways market, a consolidating market, which generally isn't really a trend. So those are the three market phases, the three real market cycles that you're going to face. And they are each indicated by how the highs and lows of the market are reacting to one another. So let's actually look at a couple of examples. We'll start here on GBP USD, and I'll talk you through. In fact, I'm going to head over to GBP AUD. I know this one is a great trending market. It's going to give you a real nice example of market structure. So if we look at this market then, this bit here is great. While we're looking at market structure, I'm actually going to switch us over to the neutral theme so that we don't have to worry about red and green candles. We can simply look at the actual structure of the market. So we talked about lows and highs and how the lows and highs react to each other. We essentially have higher highs, higher lows, lower highs, and lower lows. Now, those are the different market phases, and I'm going to show you them plotted on a chart. So when I say higher highs, I essentially mean a phase in the market where every single high point that comes in is higher than the previous. So if we are looking at this market now, I'm just plotting these on for you and then we'll discuss it. So if we look at this market, right, we can see every single time the market drives up, it drives up higher. So we see continually higher highs forming in the market. Now on the bottom of that, we also see higher lows, okay, down here, where we have every single time the market pulls back, it forms a higher low than the previous time. Okay, so I'm just going to keep plotting these and then I'll show you when they're all on there. That will do for now. So let's say then, start of the trend. We begin here. This is where the uptrend begins. And it runs all the way through up to here, the high point where the market then reverses. So all the while, this market is in an uptrend. Okay, we are seeing the market continually rise from down here all the way up to here. And this is indicated by higher highs and higher lows. So as you can see, we start here with this low point, and from there we get a higher high, higher low. So this low point is higher than this previous one. This high point is higher than this previous one. We then get another higher high and another higher low. Another higher high, another higher low. And continually, you can see every single step of the way, these higher highs and higher lows forming. So this is how we know that we're in an uptrend. And this is how we're actually going to gauge an uptrend in the market. So we use this to our advantage because we want to trade in line with the trend always. Now, if we know that the market is forming higher highs and higher lows, we know that this market is trending up and is ready to go up. And while, yep, eventually the market is going to come to an end, until it then breaks the structure and forms lower lows and lower highs, which we'll talk about in a minute, we are in a buying phase where we actually will only look to buy the market. So the idea here behind this market structure is we want to wait for a new higher low to form, and we want to look to buy into that higher low and take it to the next higher high, or take it even further, all the way up into the trend. So that is how we work in an uptrend. Okay, we want to plot the higher highs, higher lows, and then we actually want to trade in line with that. So that's the first step. It's nice and simple, but it's what we want to do before we actually get into any trading. Okay, because market structure, of course, we are looking at the overall picture. Now, what does this tell us? We want to buy in this market phase. This is when we can then actually scale down and begin using everything else that we're going to learn in this chapter of the course to actually find setups to trade in line with the trend. So that's an uptrend. If we look here now, we can see from the end of this uptrend where we get this final higher high, the market then begins forming lower lows and lower highs, and that takes us into a downtrending phase. So from here through to here, we are consistently trending down. Now let's actually switch it up and begin plotting the lower highs and lower lows. So you'll see, as I'll explain a bit more in depth in a second, after we form that highest point there, that peak, we then actually began to form lower lows and lower highs. Sorry, I've just switched this up a bit. Okay, and then let me just plot on the lower lows. Sorry, I just messed that up, but it's all good. You'll see then that we have lower lows and lower highs. So this is a downtrend, okay? So when we're in this phase, we only want to be selling the market. So this is a buy phase where we only want to buy. This is a sell phase where we only want to sell. So when we're forming these lower lows and lower highs, we want to try and sell from the lower highs to bring the market down. When we're in higher highs and higher lows, we want to buy into the market to bring it up. That is as simple as it gets. And that is going to be the basis, the foundation of all of our trading. So if we just were to switch it to the line chart, you would clearly see then, without all of the noise, without the wicks, the higher highs and higher lows forming, and then where it switches to the lower lows and lower highs. So that is an uptrend, that is a downtrend. Now, when do we know when an uptrend is going to end and when a downtrend is going to end? Well, we've got some great examples, so I'm going to show you now. If we look at this high point, let me just box this off. If we look at the high point of this trend, we can see, okay, higher high, higher low, higher high, higher low, higher high. So what we actually have here is a higher low, that point in the market there. So we're just focusing on here for now, where we have that very high point of the market. So this is how we know that the market is turning into a selling scenario. We see a higher low, so the low point in the market, give way and price pushes through to form a lower low. So you see all the way through this trend, we continually formed higher lows, higher low, higher low, higher low, higher low, higher low. When the market actually has the strength to push down, or should I say the weakness to push down beneath the previous higher low, that then sets in motion a downtrend. That shows us that the buying in this market is now weaker than the selling, because the selling is able to form new low points in the market over the previous high points that it has been forming. So this is the first indication that we are moving into a bearish phase in the market, when a higher low gives way and forms a new lower low. Now, what we will actually then look for is a lower high to form. So if a high point forms anywhere underneath that previous high, for example, it did all the way down here, but anywhere up to here really would still be a lower high. If the market then fails to surpass that high point, we know that this is confirmed, right? We saw the market was able to form a lower low, and now it's unable to come back and form a higher high. So that shows us that the market is going from an uptrend into a downtrend, and we are therefore ready to sell. So that's actually how we identify a shift in the market sentiment. We watch for the areas where the higher highs and higher lows are turning into lower highs and lower lows. And this here is one of my personal favorite trading opportunities. We can trade continuation, which means trading in a trend. For example, if we were to sell into a trend here, or sell into a trend here, or we were to buy into a trend here, or buy into a trend here, we can trade that. That's brilliant. However, my favorite scenarios, my favorite tradable opportunities come from these market trend switch ups, where we go from an uptrend into a downtrend, or from a downtrend into an uptrend. These are my favorite trading scenarios because they allow us to enter right at the top or right at the bottom of a trend to catch the largest possible move. So that's the overall market structure. I've showed you uptrends, I've showed you downtrends, and I've showed you the area where an uptrend switches into a downtrend. So the final thing then to talk about is going to be when the market switches from a downtrend into an uptrend. Now, if we focus on the market from here, let me just clear the charts now. If we focus on the market from this point, so let me just plot this whole area out for us to focus on. From this point to, say, this point here. Okay, so this is what we want to look at. We'll see that the market formed lower highs, lower high, lower high. And it also formed lower lows. Okay, lower low, lower low, and another lower low in there. So we can see this downtrend, okay? Starting here, and then we form lower low, lower high, lower low, lower high, lower low, lower high, lower low, okay? And the market is then coming down. So let's just focus on that, nice and neat. And then what actually happens is the market stalls out, and we go into this sideways motion. So this area here is where we begin seeing a shift in trend reversal, shift in trend direction. We have this downtrend, where it actually stops forming lower lows and lower highs, and instead then begins trading in a sideways motion. So we come in, we form this lower high, which is essentially going to be an equal high with this point here. So this is where we know, the market has formed this lower high area and is now failing to actually trade any lower. So where we actually then begin to form equal lows here, so one low, two low, both equal, and one high, two high equal, this enters us into a consolidation phase, right? We spoke about the three market phases: downtrends, uptrends, and sideways markets, which is consolidation. So that's what we're in now. We're seeing consolidation in the market. So to identify a shift into an uptrend, we simply look for the opposite of what we looked for up here. All right, we look for the area where lower highs and lower lows turn into higher highs and higher lows. So if we look here, we actually have a higher high, okay, which is where we've come down, forming the lower high, lower high, lower high, and then we've actually taken out these lower highs and formed a higher high. So this is the first thing that would indicate that we are moving into an uptrend. Now, would it be safe to buy in right here? Probably not, because we are still beneath this previous lower high. We could very well come down, okay? So this would be the main area that we'd like to take out. Now, what would really give us indication then is if these lower lows and lower highs turned into higher highs and confirmed with a higher low. So when we see the market come down into here, tap into this consolidation zone and then begin moving up, we form there a higher low. So we've gone from lower lows and lower highs. So low point, equal low, slightly higher, but roundabout equal low. And then the trend was actually switched into an uptrend, which was confirmed by this tap into the box here, which formed a new higher low. So we've now gone from the LLLH scenario to a HHHL scenario. And this is really where we would like to begin buying into an uptrend to capture a new trend and to ride the wave of this uptrend. So you've seen that uptrends, downtrends, and the trend reversal areas where uptrends are turning into downtrends and downtrends are turning into uptrends. This is market structure. And this market structure, this whole identifying the highs and lows in the market and seeing how they react to each other, is the basis of all of our trading. So what I want you to do is dive onto your charts. Now, you can use the bar charts, you can use the candle charts if you want. However, for the example, like the video that I've just done, and for learning, you might actually want to switch over to the line chart. So we can utilize different types of charts in different scenarios. And for learning about market structure, the line chart can be very useful. If you can first of all learn to identify higher highs and higher lows on the line chart, you can then switch to the candle chart when you're comfortable doing that. And you'll see that we are able to easily identify the higher highs and higher lows in the market by doing this. And when you can do that, you can then actually have a go for yourself at identifying uptrends, downtrends, and trend reversal areas. So I hope this video has been beneficial. We're really stepping into the chart work now. We are going to move on to some of the other market flow aspects for identifying the overall shape and direction of the market. And for now, I would say just go before you watch the next video and do a little bit of homework here. Try this out for yourself. It's very, very important that you can identify this market structure because it's going to honestly be the basis of all of our trading. So put in the time, put in the work, and actually go and learn to identify this for yourself. Cool. So thank you for watching this video, and I'll see you over in the next video when we are going to be talking about key levels, a nice, important topic to actually identify entries, targets, and more. So see you over there.